Bloomberg Audio Studios. Podcasts, radio, news.
Let us focus on the numbers, the beat from UBS, also the broader macro landscape. Here's the CEO, Sergio Ermotti.
If I look at the macro and geopolitical front, the US election for sure won't be an uneventful topic. So I think that no matter who wins and how they win and how things play out, you're going to see changes and movements in markets. So it will remain to be seen how investors will react to that.
And the US election is exactly 7 days from now. So how do you prepare for that?
Well, we are prepared to basically stay close to clients, advise them, and on how to eventually position themselves and take advantage of any movements. But also, from a bank standpoint of view, of course, we are always prepared for major events.
But so, what do you exactly worry about? Is it market volatility, uncertainty, or is it also the impact, for example, of a Trump presidency on tariffs and on bank regulation?
No, that one is not really the issue. I think that. Right now, the markets are pricing rather a Trump victory, and think that if this is confirmed, it remains to be seen. Is a classical sell on news event, or how he wins will be also determining. Is he in control of the Congress? If Kamala Harris wins, of course, some of the trades that are ongoing for Trump will probably have to be reconsidered, and therefore they're going to create rotations in the market and other movements. So I think, as I mentioned, it's not going to be an uneventful topic.
Does that mean, extra inflation? And how do you think it impacts, is there going to be a standstill of M&A, again, depending on what happens and who wins and how they win?
No, inflation, I don't know. Inflation is probably going to be more, a consequence of the ability of central banks to really do the last touch and really bring core inflation below their targets. And the risk there is probably more coming from the geopolitical front. Any dislocation in respect of supply chains, energy access, energy prices can bring back inflation to a level that may slow down the pace of rate cuts. But on the rest, I think that we are well prepared for any scenario.
Sergio, on share buybacks, you have a pretty hefty, number that you want to give back. Is there anything that puts that at risk?
Well, it's fairly modest compared to what UBS and other banks are doing nowadays. Is somehow reflecting the fact that we are still midway into the integration. We need to still absorb a lot of cost to restructure and Credit Suisse. So I think that despite the fact that we have very strong results, we still are halfway in the journey to restore the profitability levels that are allowing us to have the similar return on capital we had before the acquisition.
But so, again, there are many questions about extra capital requirements also by Swiss authorities. How does that impact actually your thinking on share buybacks and dividends?
It's a consideration we always have to think about, but in the short term, this is not going to affect our policy. We are executing our 2024 plans, and we believe that also for 2025, this will not be a major issue, and then of course we have to consider all the elements, but our aim is to continue to our aim is to deliver same levels of capital returns UBS had before the acquisition by the end of 2026.
How are your conversations going with Swiss authorities on these capital requirements, and where do you think they'll land? There's a range between 10 billion and 20 billion.
The conversation are still at technical levels, so I think that it's premature to, the rest is going to be, once we finish technical level discussions, there's going to be then a consultation process. We are not in control of timing, so in that sense, it's way too early to speculate or on this matter. We do believe that we have a very strong capital position, and we do hope for a proportionate outcome.
That was the UBS CEO, of course, Sergio Ermotti, speaking to our colleague Francine Lacqua.